Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer and today we're going to be taking a look at Advanced Micro Devices, ticker AMD. This one came in by request down in the comment section of one of my other videos. If you have a request, just drop it down in the comments. I'll get the ticker on the whiteboard behind me. Eventually I'll make a video. If it's a stock that's in the S&P 500 like AMD is, I post those on YouTube for free. The rest I post over on Patreon, which is $5 a month. And then I have a free tier over on Patreon too, where I post all the YouTube videos and a few extras when I get time. I've been pretty busy lately, but usually in the winter I have more time to do more extra stuff like that. And if you join Patreon, you can also get a big discount to the full Cyclical Investors Club service over on Seeking Alpha, if you ever decide to join there. So, as always, this is not individual investing advice. This is just how I analyze stocks. In this case, it's really going to be how I analyze stocks because I've owned AMD in the past and I sold some, but I still own some. So it's kind of a good mix here. I have skin in the game, but not super committed skin, maybe, I guess. I'll explain it all in the video. I also have a 25% off affiliate link for Fast Graphs down in the description, so you see me use this in most of my videos. If you're ever thinking about, they have free trials there, so it doesn't really cost anything to try it out. And if you've never had it before and you use that link, you get 25% off, and I get a little commission for the channel here. So, all right, let's get into AMD. So first things first, this is a little bit slightly complicated, but it's not like super hard to kind of understand. If you ever watch any of my other videos, usually the first thing I check is the historical earnings cyclicality. So that's this dark green area on the fast graph here is earnings per share. Let's shrink this down a little bit so we can just see a little bit the scale a little bit better back in the old days here. Now, typically, if I see this green number fall below 50%, that's deep cyclical. It fell 400% there, 100% there, 1,000% there. So between up until, we'll say, 2018, this has been a very deeply cyclical business. Now, whenever these guys are in the semiconductor business, they make semiconductors or design them, I guess. But the main thing is, they're in the semiconductor business. Whenever you see a business in the semiconductor business, you pretty much should assume that it's cyclical. There are some that are not crazy cyclical. They're a little more growth, kind of secular growth, which I think AMD has shifted to become, but that does not take away from the overall cyclicality of this industry. There are high overhead costs. A lot of those are fixed. And when business declines during any kind of downturn, then a lot of those costs remain while the profits don't. And then during up cycles, they can charge more for their products because there's high demand and it's hard to increase capacity quickly. And so prices go up and they can make a lot of money very quickly, right? So that's what we saw during the past cycles. I could show you 50 semiconductor stocks and they would look kind of similar, like the good ones. So when I see that, usually what I look is to see, are these cycles improving? Are they getting better? They obviously really are, especially since back here during this last bust from the pandemic, they didn't even have earnings go negative. Like they stayed positive. It looks like they're going to remain positive this year. So if I compare this to another stock that I bought during that dip, Micron, their earnings did not stay positive, right? So they're even more cyclical than AMD. It's a good way to just look and kind of compare the cyclicality. Even though Micron, has a good history and all that too. And I made good returns, excellent returns. I got a double basically on Micron too. So nothing against Micron, but they're more cyclical. And we do see some signs here, which is important, I think, for what I'm about to get into in terms of having a strategy to potentially buy AMD, is I really think the case can be made that they are not as cyclical as they used to. Now, I'm always very reluctant to make this case because people used to say that about Micron. They say that about all kinds of semis, especially when they're in a nice upcycle, that cyclicality's over and the stock will never fall again, fall deeply again. And I could go back to 2018 when I bought Micron back then too, and people said the same thing, and it still crashed just like it always. The stock price still crashed just like it always did. Even though earnings might not have been quite as cyclical as in the past, they were still enough to. And sometimes the market doesn't care. Like, they know, the professionals in this market, they know what these cycles are. They understand them, and it's the retail investors usually, or the individual investors. I've been told not to say retail investors because it's kind of a pejorative, or it makes people sound like they're products or whatever, or just that you're selling people stuff basically, which is what Wall Street is doing. It's not really what I'm doing, so I never thought of it that way, but I've been trying to correct myself. So individual investors are the ones that kind of don't really understand these cycles usually. And so when we look at AMD, that's what happened. This was a huge boom. Also, ignore PEs for cyclical businesses. So this is it's a pretty high PE, right? But I mean, when it was here, it wasn't. A lot of times during the peaks, let's put it this way, PEs can actually be low. They weren't in this particular case because this was basically a bubble. But a lot of times the PEs can be low, and they go look. The stocks still sell off a lot if people are buying them at the peak because the earnings fall so much, right? I mean, it doesn't matter what the PE was back. This isn't probably the best example, but I'll look. So yeah, actually, it is a good example. Okay, let's go back to 2011 here. The PE was like 11, like 10 or 11. Okay. How much do you think the stock fell like during that downturn? I mean, that's cheap, right? That's super duper cheap. But the problem is earnings went like negative. They went, which downturn am I on? In 2012, they went 132% negative. So you buy here at a 10 PE, and 1 year later, after the earnings fall, you have lost 60% of your investment, right? So you bought cheap and you lost more than half your investment. So that's why you don't use earnings for cyclical businesses, like deeply cyclical ones. Now, if it ends up AMD only has these 25% earnings declines in the future. Now, we haven't had a recession. This is just the stimulus and pandemic bust, right? So we don't really know what the next downturn will look like. It'll probably be worse than this, most likely, but it might not be like 130% negative or whatever. We don't really know that yet. So that's kind of where the guessing comes in. But we do know it's cyclical. So the way I do this is I say, okay, is it like a super cycle or a crazy bubble? And then if as long as it's not, I use previous drawdowns to say how far could the stock fall during a down cycle based on the previous cycles. I'm not going to go super into the details here, but if I recall, 65% off the high was what I was aiming for AMD during this downturn, and I basically bottom ticked this one. So it doesn't show 65%. Because this isn't intraday and it's probably not even the exact top and bottom. But I was able to buy this one right at the bottom. Sometimes I get lucky and that happens. Sometimes I miss them and sometimes I buy them and they keep falling farther and then they still come back and make money. So that's nice. So I didn't know if that would be the bottom, but I knew that's when I wanted to buy it based on the history, right? So now the hard part is when you're not really using earnings, you have to rely sort of on the previous cycles also to say, okay, what was the market willing to pay at the peak in the past? And then I usually assume that the market isn't going to be willing to pay more than that. A lot of times it does, but I don't have any kind of reference point. I'm just guessing then. So I usually once they recover their old highs or get close to their old highs, usually that's when I take profits. And I try to buy at a low enough point where I can still make very good money. So in AMD's case, I sold after a little over a double. So I bought down here, and I sold. I think it was on the 5th of June. It's pretty close. Might have been a little bit better than that, right in here somewhere. So yeah, I think I had more like 106, in between 105 and 110. So Yeah, that's more like it. So that's about what I did in a little over like a year and a half. So get into long-term capital gains territory, which is nice. You double your money. But what I did with AMD is, first, there's a couple things worth noting. I knew that this downturn was, I didn't know if it would continue or not. If the economy weakened a little bit, it could have gone, we've seen in the past how bad they can be. So I was being a little cautious because I didn't actually wait for this peak up here, because this was a little bit of a bubble, right? So I kind of looked at these levels and I got my double, which is usually the basic thing that I'm looking for. And then I said, at this particular time, we really didn't know where this was going to bottom at. And the Fed was raising rates, definitely not at the bottom of an economic cycle. We still aren't at the bottom, anywhere near the bottom of an economic cycle, or much closer to some kind of a top, even if we end up with a soft landing. So that's why I sold half my position. Usually I sell all of it. So why did I keep the other half? And this is all kind of important for the buy prices that I'm going to share and the strategy that I'm going to share here in just a second. So AMD's taken a lot of business from Intel. I want to say that, I'm trying to remember, we had a little bit of the AI kind of craze start about the time that I sold it. So there was some question there whether this secular growth phase could be really strong, right, for them. I don't know. I still don't really know. But we do know that the demand right now it's basically put a bottom under this down cycle if you can get a little bit of the AI business, which they've been able to do. So, and we haven't had a recession yet. So the stock, the half that I held on to, I think it might have gone on to actually double. Now it's come down a lot. So yeah, it was pretty close. I think it was very close to even doubling, like, again, the second half that I had, which would have been the equivalent of my original position, right? Now, that's a bet on the long-term secular growth of the business, and essentially it's a buy and hold for me. I had a little bit of a valuation. I kind of kept an eye on it for a while, but eventually I just decided, I'm not going to try to pick this top or whatever. Who knows how this all was going to turn out. I already made 100% on my initial investment that I took profits in. So I was like, we'll just leave this part in and let it go long term, and we'll see. So I'm kind of playing both sides a little bit and just accepting this kind of volatility. I really don't even pay attention to this stock anymore, even though I still own it, because no matter what the price does, and really no matter what the earnings do, because they can do anything too, it's not going to trigger me to want to sell it, right? It's a bet on the long-term secular growth of AMD's business, and that there's a chance that they might not be as cyclical in the past, and that I might not be able to buy it 65% off its highs again due to that. Now, on Micron's case, which I also bought at the bottom, I took full profits at the top because I really didn't see as strong of secular. Well, I already showed you the earnings, right? Micron's earnings went completely negative. So you can see just the difference in the earnings, that I didn't have the same kind of confidence that even though it's in a secular growth phase, that would be strong enough to cancel out the cyclical downturns. Hopefully that makes sense. So for me, the part of this that I have left, I'm just letting it go. Now let's take all this and put it for somebody who's new, who doesn't own this stock, who's coming in and they're like, oh, AMD, I like them for whatever reason, maybe read about them. Maybe it's kind of the AI, maybe it's this new secular growth phase, maybe it's that their business is kind of taking over a lot of other people's business, and so they've been able to grow in ways that they haven't been able to grow. You could go on and on and on, right? So what's the strategy for buying it? This is a high quality enough business. It's hard enough for people to we've seen how long it's taken Intel to decline, even though people saw it coming. Some people smarter than me saw it coming 5 years ago or 6 years ago or 7 years ago, right? People who really knew the industry well could see that. So it takes time sometimes for the future to kind of play out. But what I would say here is my strategy is to have if it's a person with new money, to think of like a 2% weighted total position broken into 4 parts. So like so if you have a portfolio that's $100,000, it would be like 4 $500 initial investments. Okay. And think of half of that is betting on the long-term secular growth that I was talking about earlier. And the other half is acknowledging that the stock price could be deeply cyclical, just like it was 2 years ago, even though we didn't have a recession 2 years ago. So here's what I would do. When I do my basic, I was looking at about when I sold here and kind of what the valuation and what my thinking was before this. Down to some of this right here could have to do with kind of AI enthusiasm, and it's not during a recession. So there's still a chance that this could fail, I think. So I thought, well, what was I thinking back then before things got a little, muddled, and before things got more optimistic, we'll say. And back there, about $120 a share, that was where I still felt it was okay to like hold half the position. So I think in terms of these 4 spots, and nobody knows, like analysts are saying earnings are going to grow 58 and 35. They don't know. Nobody has any clue. They could actually be negative in a year. So we don't really know what these cycles are going to look like. Analysts certainly do not know what they're going to look like. So, but they might be right. So if they're right, that's what these kind of investments at these higher dollar levels would be betting on. So I initially would come in with that type of mindset, long-term hold mindset, at 120 with 0.5%, and then down at 100 at another 0.5%. And then we're getting into like the deep cyclical territory that is what I used to buy the stock originally. And that would be about 50% lower than where the stock is now, so about $80 a share. Okay, so that would be like the third one. And then there's actually, if there's a deep down cycle and like a global recession, people stop buying like as many electronic stuff, and AMD's built out all these things. You could definitely see it down to like $60 a share. So I think I would have that last really deep one down at like $60 a share, and that's how it would go about layering into it. And those buy prices would hold until AMD goes on and makes a new high. So until it gets over, I'm basing that on a $227 high. So until it starts getting up to like 230, 250, those buy prices are all the same. I wouldn't really change any of them until I saw new highs. And then the floor would start to raise on those deeps. You could probably raise the floor of like everything at that point. By however much it exceeds, say, like $125 a share. On the upside, if it just takes off and goes berserk. So that's how I would go about it. 2% total weighting if a person never got the chance. But starting at 120, then 100, then 80, then 60. That's a very reasonable way to balance all these cross currents, all the different dangers. But I would feel very comfortable no matter what, if it looks like the world is ending and AMD is at $60 a share. Totally put a couple full percentage points of your investable money in at that point. I mean, feel very comfortable doing that. Really, if you're layering down at like 80, fine to make a 1 or 2% size bet on it if you want to wait. Now, I already own some, so I would add more if it got to 80. And then I haven't figured out exactly how much lower I might add more. If I only added a partial position, I would probably add a full 1% position at 80, honestly, just me, and just leave it at that, because I would find other stuff to spread my bets around a little bit more. And I already own some. But that's a good way, I think. It's a pretty stress-free way to do it. But if it gets to 60, if it gets down to even 80, it's going to be scary. Like, the news is not going to be good. These earnings are going to be falling. Everything's going to be bad, and people are going to talk about how this was all an AI bubble. All right? Hopefully I can go back and play this hopefully it really happens, and I can go play it in a couple of years. And you need to ignore all that. That's why you do this all ahead of time. You think about it all ahead of time. You put trust in the historical patterns that have happened in the past. And and that's what I did here when I was buying when, nobody else was buying. So because a lot of people had already bought during the boom, they already got sucked into the story during this boom. So they didn't have money to buy, and they didn't have confidence usually to buy either. Now, there definitely have been some AMD folks that bought way back here that kind of believed and saw some of this ahead of time, who just held through the whole thing, and they did fine. But really, nobody was buying here, or the stock wouldn't have been falling off of a cliff. So that's kind of my thoughts, my primer. A lot of it is the way you think about it, and then having a plan ahead of time, and then just following through with the plan. And I try to keep these position sizes relatively small because it can keep you more rational. And because there's more stocks than AMD that are going to be down if it's down at $80, right? I almost was able to get NVIDIA down at that trough too. I missed it just barely. And this is all before the AI stuff, right? So there's going to be other opportunities if these are down, and I would rather spread my bets around. It makes it relatively stress-free for stocks that can fall 80% off their highs. And because they're good businesses and you have a plan. And okay, I'm not going to repeat myself anymore. If you found this useful, hit the subscribe button, hit the like button. These are the type of things that AMD is kind of like Micron. These are like kind of my specialties, like semiconductors that are deeply cyclical or high quality. It's exactly the type of stuff I like to buy. I don't always get opportunities to do it at the price that I want, but when I do really well. So yeah, hit the subscribe button. Have any requests, let me know, and I'll get them on my board. I've been making videos a little bit slower lately, a couple a week, but I'm going to keep putting them out. So see everybody later. Bye.